this is a video tutorial for hands-on 6, where you will learn how to set up a case study for a single combined cycle power plant. So I'll quickly go through this following the hands-on exercise. So first we need to create a new case study. So we'll create a new case study with this box over here. We will name the case study CCGT demonstration. And in our case description, we will say something like hands-on 6 case study on a single combined cycle power plant. And we will create case study. And you'll see that it is now at the top of our list here, CCGT demonstration. So we will click on this. And we'll now have to fill in general information following our hands-on exercise. So we are told in the hands-on that the start year is 2015, the end year is 2040, the plant type is a single plant type, the local currency is local currency, and the foreign currency is US dollar, so we'll drag and drop. You'll see that the name of the case study and the case description has already been filled because we did that already in the previous step, so we'll leave that as it is. And we'll click on Save Data. Now we will move to inflation information. So following the economic information section from our hands-on, we will input the relative data. So our hands-on is telling us that US dollar, the inflation of US dollar will have a steady rate of 1%, and the local currency will have a steady inflation rate of 5%. So we will put this down and we click on Save. And now we move on to the next thing, currency exchange rates. So our hands-on is telling us that that exchange rate reflects inflation rates. So we'll click on this one here. And for 2014, the rate is 3. And in 2015, the rate is 3.2. So we'll write down 3 and 3.2 for 2014 and 2015. And we'll click on Save. Now we will move on to the next section, taxation data, as we have already finished inputting values for our general data. So we'll click on taxation data. And this page will appear. So we'll leave this declining balance depreciation rate for assets of 2014 blank, as our hands-on did not provide us any information on this. Following the other information that we are given, we will click on tax loss should be carried forward. And we will put down 0 to ensure that tax loss is carried forward. And our tax rate, we are told, is steady with 20%. So now we click on Save. Our hands-on did not tell us anything about royalty payment, so we will leave this page blank. And we will move on to the next section, which is initial balance sheet. So we'll click on that here from the left menu pane. So looking at the financial information section from our hands-on, it is telling us that short-term deposits and equity are both at 80 million. So we will put down 80 over here and 80 over here. And remember to click on Save. Now go to sales and purchase data. Well, our hands-on did not tell anything about old commercial loans, old bonds data, committed investment data. So we'll leave these 3 blank. And we'll move on to sales and purchase data, which is our next section within case data. So now this page will appear and we will have to add in data. So click on this green symbol. From the background information section, we know that the power plant will be selling electricity for a client. So we'll click on electricity. Our client, let's just, for this sake, write down utility. And we're told that electricity can currently be sold at 0.24 local currency units per kilowatt hour. So we will put down over here, which is under price for first year, 0.24. And we're also told that prices will increase with inflation. So click on this third option here. So standard change in addition to inflation. And we're also told that the plant will generate 2,000 gigawatt hours from 2020 onwards. So first we'll save our data, go back to edit, and write down 2,000 for 2020. And remember, a value entered for 1 year will be applicable for subsequent years until a new value is entered for future years. So we only need to put down 2,000 for 2020 because that means that all the other years, for example 2021, 2022, 2023, and 2024 will all have the same value, which is 2,000 until a new number is put down. And to ensure to represent a price increase with inflation, we will put 0 into the standard change in addition to inflation box. So this will ensure the value is increasing with inflation. And now we have inputted all of our data for case data. Remember to click on save. We will also leave purchase data, consumers' contribution and deposits, fixed revenues and other income blank, as we were not told anything about these sections in our hands-on. So now we move on to plant data. And click on this button, which will let you add a new plant. So as we're modeling a combined cycle gas turbine, we will just put down CCGT, for example, for this case study. And from the background information section, we know the following information for plant type, status, ownership, unit size, as well as years. So we're told that our plant is gas and we're importing gas, so we will click on gas imported. Our status is future, our ownership utility, and our unit size we're told is 300 megawatts. First operational year is 2020. Construction period is 3 years, and plant life in years is 30 years. And we're told that our plant will produce electricity only, so we will only click on electricity. And now we will save our data. And now click on this pencil icon again, and we'll move on to the next tab, which is plant production. You can find this information in the background information. So we are told that our plant will produce 2,000 gigawatt hours, and we'll put 2,000 here for 2020, and we'll click save. Now the next one is operation and maintenance costs, which you can go by clicking on this button here. Again, in the background information, we are told that the cost would be 29.44 million in local currency, so we'll leave this here. And for US dollar, we will put down 0. For fuel costs, we're importing gas, therefore we will look at the US dollar column, and we are told that the cost would be $109 million. So we'll put that here, and for local currency, we'll put down 0. We click on save. We will skip general expenses data as we were not given any information on this, and we will move on to investments. You could find the information on investments in the background information section. So we're told that in US dollars, investment will be 300 million, and we will not have any in the local currency, so we'll put down 0. Because we put down construction period as 3 years, there are 3 years shown on this table here. So the first year is 2016, then we have 2017, and 2018. And we're told that the distribution will be 25% for 2016, 50% for 2017, and 25% for 2018. And now we click on save. And now we move on to sources of financing, which you can go to by clicking this button over here. Following the financial information section, which is at the top of the hands-on, we should input the values for US dollar. So you can see that constant prices have already been filled in, and now we need to add in an export credit. So we click on export credit 1, and we're told that this will be 60. So we put down 60 for all the years, and we click on save. And now we have to define this further. So we have to click on this terms of financing box, which will take us to a new page. The term we are told is 12 years, so we'll put down 12. Repayment option is uniform with principal and interest, and our interest option is constant with a rate of 5.5. And we will click no for IDC financing. And now we click on save. And now we will move on to the next thing, depreciation. So our hands-on told us that there is a linear depreciation of 20 years. So we will click on linear and we will type in 20 and we'll save this. And now we move on to next one. However, as our hands-on did not tell us anything about decommissioning, we will leave this blank. So we have finished all of our plant data input, and we will have to move on to Financial Manager. So we click on this Financial Manager tab, which you can find on the left side. So from the financial information section, we know that there is no limit to dividends being paid out. Therefore, we will put in a very large number. So for example, 999 to represent this. This large number will ensure that whatever profit is made will be released in the form of dividends. We now need to enter the values for equity. You can already see here that this value has been inputted, as we already did that before. So we do not touch this number. And equity, we are told, is 100 in the year 2017 and 130 in the year 2019. So we'll put these here and we'll click on save. So now we will move on to new commercial loans. Following the financial information, we are told that for US dollar, interest spread above inflation is 3% and the term is 8 years. We were not told anything about local currency, so we will leave this part blank. And for this table down here, we are told that in 2018, there's a drawdown of 60 million US dollars, so we'll put down 60, and in 2019, there is 10, so we'll put down 10. And we click on save. And again, we do not put down anything for local currency, as we were not told anything about the local currency. And next we go to new bonds. We're told that in US dollars there is an expected rate of 5%, and for a term that is 5 years, so we put down 5 and 5. We're also told that the plant is issued 10 million US dollars, so we'll put down 10 in the 2018 box, as we were told that this happens in the year 2018. And again, we will leave local currency blank, as we were not told anything about local currency. And now we save our data. We move on to the next page, which is other financial data, and we see 3 boxes here, which we need to input. So we'll focus on the first one, which is other financial data, which you can find in the financial information section from the hands-on. So spread for short-term deposits above local inflation, we're told should be -1. spread for standby facility above local inflation is 4%. And as we're not given information on short loans, we'll put 0 for this. And we click on save. So now we move on to the next box, which is shareholders return data. The approximate average return, we're told, is 10. Disposal year is 240. Discount rate is 6. Sorry, disposal year should be 2040. And now we click on save. Terms of project finance loan is the last box, which we will look into, and we are told that the discount rate should be 6%, so we put down 6%. Average loan term is 12. Security ratio for a loan period is 1.4. An expected life of project is 30 years. Security ratio for project life is 1.6. And the first year of cash to debt service is 2020. And now we save. And well done, you have now inputted all of the data on FINPLAN, including case data, plant data, and financial data. To run our results, we'll click on calculate, and FINPLAN will automatically generate your results for you. We will now need to look at our results. So first, we will have to click on cash inflows and outflows in local currency, which is the second thing here in our list of results, to double check and make sure that our data input has been correct. So first, we need to ensure that power plant is under construction at the correct time. To double check, we have to make sure that there are values for investment, which is this row for the years 2017 to 2019, as we have stated that those are the years under construction. So we see here that indeed there are values for investment from 2017 to 2019. So our power plant is under construction at the correct time. We also need to double check that sales only appear after the year 2019. So sales is over here, and indeed sales only occur after construction of the power plant, which is 2020 and onwards. Now we need to check the cash available in short-term deposits. As short-term deposit has a low interest rate, it should be emptied as quickly as possible. And we can check this in the first row here. However, our results show that this is not the case. Cash is available throughout. Now we need to check the standby facility, which is further down over here. And we need to ensure that it should be rarely used. So this is the case, as it is mainly 0. Now we need to check the flows from the short-term deposits, which is down here. As mentioned, it should be emptied as soon as possible. However, we see that there are substantial flows from the short-term deposits during several years. For example, in the year 2017, in the year 2019, 2020, and 2021. So from the results above, we can conclude that this case study is not balanced. We have too much cash available. We added new equity and new bonds in this case study, which could be an explanation as to why we have too much money. So now we need to adjust the input data for the CCGT case study so that it is financially balanced. So now we will close this and we'll go back to manage case studies. Here we will, because we're adding additional data, we will create a copy of our CCGT demonstration file. We click on this and we will name the CCGT demonstration balanced. And we click on save. So now when we go back to our list of case studies, you'll see that this is our original CCGT demonstration case study, and this is a copy of it. So this copy is the one that we will work on now to adjust the input data and make it a more balanced case study. So we will click on this. So from our results, which we looked at just now, cash was available in the short-term deposit in 2017, yet further equity is injected, which is not required. The equity should therefore be reduced to 30 million in local currency in 2017, and results should be calculated. So this is what the hands-on says. So because we are working with equity, we want to go to Financial Manager, where the equity page is. And previously we put down 100 for 2017 and 100 for 2019. But now the hands-on is telling us that we should reduce this number, this 100 number, to 30 million. So now we will do just that and change this to 30. And we click on save. So the hands-on is telling us now that we also need to do some changes to the year 2018. So previously we did changes to 2017. Now we need to do changes to the year 2018. It says in the hands-on that the high debt equity ratio of almost 0.9 in 2018, which we can check if we go to our financial ratios page. And if we look at debt equity ratio on 2018, so 2018, here it is almost 0.9 in 2018, so this suggests that it may not be acceptable to a lender. Furthermore, the capital markets may only be accessible once the plant has been in operation. Therefore, the 10 million USD bond issued in 2018 should be removed. So we go back to the Financial Manager page, we go to New Bonds, and we need to remove this. So the hands-on is telling us to remove it, so we'll put down 0. The commercial loan, remember to save before we move on to the commercial loan. So for the commercial loan, that our hands-on is telling us that we should also reduce it to 30 million USD in the year 2018. So previously you can see 60, now we want to change that and we will put down 30. Now we click on save. And now our hands-on is telling us to change equity again, so we go back to equity. And it says in the hands-on that the missing amount of equity for 2018 should be replaced with 140 million local currency. So we put down 140 here. Apparently this will improve the debt equity ratio during construction. And now we save our data. Once our data is saved, we'll click on calculate again. This will make FINPLAN calculate with our updated input data, hopefully giving us a more balanced case. And now we click on cash inflows and outflows again. So when looking at the results after recalculating, our short-term deposit is emptied as soon as possible. So for example, the first year of construction, which we can see here, it is now 0. Also, the standby facility is barely used compared to the overall investment costs, which we can see here. So it is relatively small compared to our overall investment costs. And our financial ratios have improved, which we can see if we go to the financial ratios page. And we can do that here. We can see that debt equity ratio is still low, which we accept for the time being. Our debt service coverage ratio is still quite low, which we can see here, and we will accept this for the time being. We assume that this is not our only project and that we have cash reserves available within our company. In reality, we would of course have to demonstrate to the financiers that this cash is available and reserved for this project. And there we have it. We have now adjusted our data to achieve a balanced financial model. Remember that you can download your results with this button in the top right corner here, and you can also download all of this and export them to Excel in one go by clicking on this download button at the top over here. And this is now the end of the video tutorial for hands-on 6. The next hands-on 7 will help guide you through a case study for a nuclear power plant.